So last week I made 24,000 US dollar trading my concepts FLOD, OD and LLOD. Now these concepts are crucial to understand in my opinion because they will excel your trading learning curve. Now without further ado, let's dive straight into it. So here we see US dollar JPY on the daily time frame. And before we dive into that, we need to understand the 5 bullet points that will help us in understanding FLOD, OD and LLOD. Where the first bullet point is PDRs. The PDRs that we use are mitigation block, breaker block, order block, fair value gap, and in this case, swing high, swing low. Now for the first 3 PDRs that you have right there, which is mitigation block, breaker block, and order block, you always need an overlapping fair value gap for it to be a valid mitigation block, breaker block, or order block. So for example, this for me, that small down candle is not an order block. Why not? Because we never have a fair value gap. There is no overlapping fair value gap to the right there. So every PDRA that we use needs to have an overlapping fair value gap in order for it to be a valid PDRA. So we're on the same page. Then the next thing to understand is a price lag. And a price lag is from a swing high to a swing low, and from a swing low to a swing high. In that price lag, you need to have a fair value gap. Otherwise, there are no valid PDRAs and there's no valid price lag. So for example, this swing low that we have right there, which again, swing low, 3 candle pattern, right? This wick is lower than the one to the left of it and lower than the one to the right of it right there, creating a swing low. This, for example, is also a swing low. Those swing lows, they create price lags. Why? Because this price lag is where we are likely continuing higher from if we do want to continue higher. Now, if you have a bullish price lag, the swing high is not the most important part. The most important part is that swing low, right? Because when we make a retracement, we will not always have a swing high already set in place. The same when we have a bearish price lag right there. The swing high is the most important part for bearish price lag, with of course the fair value gap right there. Now, when we take a look at this price lag and we can just draw the price lag from this low to that high right there, there are multiple PDRAs in that price lag higher. So let's count them all. We have first fair value gap right there. Then we have the second fair value gap right there. Then we have the order block, which is valid because it has an overlapping fair value gap right there as well. Then the last discount array, last PDRA that we have is this swing low. These are all areas that we can continue higher from. So you can see those PDRAs as simple support areas. If we want to continue higher, we will continue higher from one of those PDRAs. Well, thank you, Mr. Obvious, because how are we going to use this? We're just going to use every PDRA and buy it every single PDRA? No, this is where FLOD, OD and LLOD then comes in. It leads me to the next bullet point, which is FLOD. FLOD stands for first line of defense. And the defense in this case is a PDRA. So if we have a bullish price lag, then the defense is a discount array. It's defending price action from continuing lower. And the first line is the absolute first discount array that we encounter in a bullish price lag. So in this case, what is the FLOD? The FLOD is this fair value gap. That is because that is the first discount array that price will encounter once it creates a retracement. Meaning that's the first line of defense. Now, once we have that first line of defense, we also have the next bullet point, which was OD. The overlapping defense. The overlapping defense is always a fair value gap, either overlapping with a mitigation block, breaker block, or an order block. In this case, we see it's a fair value gap overlapping with an order block right there. That creates your overlapping defense. Again, the defense being the discount arrays, because overlapping is always 2 discount arrays as a minimum. And the overlapping in this case being the order block with the fair value gap right there. So it's important to know that the overlapping defense is not the fair value gap that we have sitting right here. It's not this highest part of that fair value gap. It's only the bottom half of that fair value gap where the overlapping starts to happen, actually. And then we arrive at the next bullet point, which is LLOD. LLOD stands for last line of defense. Last line of defense means it's the last area in a price leg where price can continue higher from in a bullish leg or continue lower from in a bearish leg, which is always going to be a swing low or a swing high in bearish conditions. Because if price wants to continue higher, then the last thing it can do is arrive at this swing low right there and sweep that swing low to then continue higher off of that. Because in itself, the swing low is also a discount rate. So it's also an area of defense, a support area, to name it easily. Now, knowing just this is not enough, because there are small details that we need to understand as well. Where, for example, there's a mechanical approach to this, meaning if the FLOD does not hold right there and does not get respected, so does not push price higher with a new fair value gap higher, with a new price lag higher, then if price still wants to continue higher after disrespecting the FLOD, it will want to continue higher off of the odd right there, which does not only make the odd a great PD rate, a great discount rate in this case to trade off of, but also a target, right? Because after this candle happens right there, this first candle by the wick that we see right there, we know that that wick is lower time frame fair value gaps. So lower time frame fair value gaps right there are already supporting the idea of continuing higher, meaning the next candle should in an ideal world be an up candle, which doesn't happen, which means that we are disrespecting this fair value gap already with early signs. So the next few candles that we have until we reach the overlapping defense is where we can look to target lower, where this fair value gap for, I assume, quite a lot of traders is very relevant to them, but to us is not relevant. And that's seen from a completely logical standpoint, because if price does not continue higher off the first fair value gap, which is a standalone fair value gap, meaning it's on its own, there's nothing overlapping, then why would it continue higher off of this standalone fair value gap? That doesn't make any sense. They're both one, they're both equal. So price will seek a deeper discount. A deeper discount is not seen by standalone fair value gaps. A deeper discount is seen by then the minimum of two, the overlapping discount arrays, which creates a potential of minimum of two discount arrays. Now, one beautiful analogy that I can use is that price is seeking cookies. It wants the most cookies. And if price is not content with one cookie right there, and it leaves it behind, it throws it away, it wants more cookies, then why would it go for another one cookie right there? It wants more cookies. So it's going to go for two cookies, which is the overlapping defense. Now, after we reach that overlapping defense right there, that is where we can continue higher from. So currently we can still continue higher off of that. But if it disrespects that and starts to disrespect that, then it will target what? Then it will target the LLOD right there. So if these next few candles do not continue higher, then the target becomes that low sitting right there. And can we then continue higher off of that LLOD right there? Yes, but under one condition, that we do not have a bearish price lag created. So let's say we create a bearish price lag here on the daily time frame, swing high with a fair value gap in it. Then this LLOD right there does not have high probability of holding. So that is something that we need to take into account, a small detail. All right, so we have a good understanding of what these concepts are right now. So where did I actually take a trade then? Well, you would think I took a nice trade, probably going short right there, caught a few hundred RR. No, absolutely not. It's very funny actually looking at this, because I caught the smallest move right here, which if we look at this price action right there, then I simply told myself, all right, or I simply asked myself, what is the FLOD right there? What is the first line of defense? If we are going higher, where can we go higher from? That's this fair value gap right there. Perfect. That fair value gap, we need to understand, we don't need to be right on that. We are not analysts, we are traders. Now, being a good analyst helps us being good traders, but we only need to play a rejection. We don't need price to follow through all the way and for us to be correct on the entire move. Helps with our ego, does not help with our bank account. So coming into that daily fair value gap right there, I went into the 15-minute time frame and I did the exact same thing. Right here, we touch into the daily fair value gap, and once we create this price lag higher, I do not enter yet because I want another bullish price lag higher. I don't enter off the first bullish price lag higher unless I combine the time frames correctly, which in the case of 15-minute and daily time frame is not the case for me. Now, right here, what do we see? We have a few options that we can continue higher from. At this moment in time, I don't care which level we are going to hit and continue higher off of. Can be the low, can be the FLOD, can be the odd right there, can be the LLOD right there. I don't care. As long as we have a new bullish leg higher, that's it. So here we see the FLOD in the form of the breaker. This right here is indeed the odd right there. So that is overlapping with the breaker. So this, if you see a situation like this, that indeed is the overlapping defense. And after we have the LLOD sitting right there. Wherever we continue higher from, I am content with that. I do not really care. So we skip price action right there. And eventually I saw this. I saw a small but a fair value gap being created right there, which in my entry pattern is valid. So now it does become interesting because now I need to determine where I want to enter. Before I go into any trade, I already know where I'm going to enter, or at least I have it 90% set in stone. So I'm not confused on choosing the odd, the LLOD, or the FLOD, or whatever it may be. I already have a great idea where I am going to enter. That is very important to understand because emotions will come into play, right? And under emotions, under that pressure, we will likely make more mistakes. So we need to have the guideline that we can stick to. So right here, the FLOD usually is a fair value gap, but in these two cases, it's not the fair value gap. Right here, we see the order block being the FLOD right there. Then we have the odd being the fair value gap right there. And the LLOD being, in this case, we can argue it's this low, but if this low is getting taken, then also this low is getting taken. So whichever low you pick right there, not super relevant. Doesn't really matter. It's not going to save you from losing or winning, most likely again. So we can just use this low. It's a little bit more refined. And if this low is going, then likely that low is also going. Now, right here, to be completely transparent with you, I entered off of the creation of the fair value gap, which is a money-making team concept. But to briefly explain it, or to put it into better words, it was lower probability right here to enter off of this fair value gap. Why? Because we had an order block sitting right there. And in the same case where we had this breaker right there and the fair value gap is below right there, now we trade back into it. This will not always happen. And this in itself can also create a breakaway gap right there. Now, why can that create a breakaway gap? Because the first line of defense is the order block, meaning there is a discount array potentially withholding price from trading into the fair value gap, which can create a breakaway gap. And combine that with earlier episodes of the market mastery, where we went over that third candle, that gives us a great indication of what can be a breakaway gap. So in my experience and from my liking, my personal preference, I like to just get in. And I get in because right there, I can easily target a 1 to 2 before we even reach on the daily time frame the next premium array. This is only playing a small rejection, where if the daily fair value gap was following through, it would follow through on all these highs right there. I am not reliant on price following through all the way towards new all-time highs. I only need a small rejection. So right here, that was my entry, stop loss below the lows, below the LLOD as well. Why below the LLOD? Because that's the last line of defense. Now you might say, all right, but you just said the last line of defense is where we can continue higher from as well. So wouldn't you put your stop loss even below the LLOD? And yes, you could do that, but the LLOD in this case with a fair value gap going higher already is not super high probability to actually continue higher off of that. If the momentum is there, if high probability conditions are there, we should already continue higher. So eventually we continue higher and we continue higher. Takes a while, but eventually we hit the take profit right there. And afterwards, you see it hunts my stop loss, or it actually comes back to my stop loss, original stop loss right there as well, which does not matter for me because take profit was already hit with a comfortable 1 to 2 right there. Now take this knowledge and use it on Euro US dollar, or for example, we have this right here, that lag lower, which creates this new lag lower right there, which we had the target sitting right there as well. Then we had this 4-hour fair value gap right there, went into the 15-minute time frame again, which is where I took the next trade. And looking at this, we did not continue lower off this FLOD right there. I again played the rejection. We did reach the overall target, the lows right there, but no new fair value gap being created. We then come into the odd right there, overlapping defense, which we do continue lower from. After we do that, we create this new price lag, which we have one right there, retrace into the fair value gap, sitting right there. After that, we create this new price lag right there, which we also retrace into the fair value gap, do not continue lower from. All right, so we have this LLOD sitting right there, which we try to continue lower from, also fail to continue lower from, and eventually price starts reaching for LLODs, last line of defenses right there. Now, if you're interested in seeing the trade that I took right there on Euro US dollar, which was part of the $24,000, then feel free to go to the previous episode, episode 8, and that is where I fully break down this trade using external and internal liquidity. But you can also now use FLOD, odd, and LLOD and add it into the mix and see how powerful it actually is. All right, perfect.